Hi, I'm Tom Lydon, editor of ETF Trends, here in Hollywood, Florida at the Inside ETF Conference, and I'm here with Frank Holmes, CEO of US Global Investors. Frank, great seeing you.
It's great to be here.
So, exciting year last year for US Global. You launched your first ETF, JETS. Tell us about it.
Well, it was an incredible experience of learning all the factors and drivers of who buys them, who sells them, in addition to retail investors. There's a whole hedge fund world that wants to be long 3 JETS and short something, vice versa. So it's an incredible, different, dynamic market than mutual funds. So I enjoyed it.
Well, the profitability in the airline businesses skyrocketed, but also you launched at a time where energy prices were just cratering. How's that affected profitability within the index of JETS?
Well, it's been significant because it was anticipated they would have about $12 billion of free cash flow, and that bloomed to over $20 billion. And now this year it's going to be $35 billion. They increased their dividends as an industry by 88% last year. And they're seeing record stock buybacks. So this industry is the least expensive with the highest free cash flow of all the industries in the S&P 500.
So within this index, it really is kind of a smart beta strategy, correct?
Absolutely. Cash flow return on invested capital, revenue per seat. We used several different factors, 5 in total, to screen stocks, and then we did a regressional study going back over 40 quarters and looked to see how dynamically it adapted and adjusted. So 80% of the holdings are American companies, 20% are foreign, and the 20% that are foreign are all capped at 1% each. And what's great about when you go foreign, you can buy airports.
Okay.
So Bangkok Airport, Beijing Airport,
so those
Cancun.
are all part of the index?
Yes, they're part of it, but they're capped at 1% as long as they have, against the whole universe of the world, the highest cash flow returns on invested capital, the lowest cash flow multiple, and the fastest growth in revenue per share.
The market in 2016 did not like oil prices cratering the way they did. How is the airline industry going to be affected by that?
It's amazing to see. They're just numbers of cash flow because a lot of them are unhedged, like American Airlines. And that was also remarkable last year. It was the CEO of American Airlines, which is the largest airline company in the world now, said, don't pay me in cash, pay me in stock. So all this drop in the price of oil only means their free cash flow is exploding. And for Boeing, they're going to upgrade all their planes, so now Boeing's got 7 years, 8 years of backlog for delivering planes.
Fantastic. Frank, I appreciate you giving me some time today. Thanks so much and continued success.
Well, happy investing for all of your listeners.